China's appetite for commodities is enormous. It's the world's largest consumer of raw materials. Recently, this hunger has intensified, with China stockpiling key commodities. Copper, oil, and agricultural goods are being purchased at a staggering rate. This buying spree is sending ripples through global markets. The reasons behind this stockpiling are complex. One factor is China's economic recovery post-pandemic. Another is its ambition to become a global manufacturing powerhouse. China's actions are creating both opportunities and anxieties for the rest of the world. Across the globe, Europe is facing its own economic challenges. The continent, known for its robust economies and financial stability, is now navigating through turbulent waters. The Eurozone is grappling with slow growth and high inflation. Economic indicators show a worrying trend, with consumer prices rising faster than wages. The European Central Bank, or ECB, is caught in a difficult position. Balancing the need to control inflation while fostering economic growth is proving to be a formidable challenge. Raising interest rates could curb inflation but also stifle economic recovery. Higher borrowing costs may deter investment and spending, slowing down the economy further. The situation is further complicated by the ongoing energy crisis. Energy prices have soared, putting additional pressure on both businesses and households. Europe's dependence on Russian energy has become a vulnerability. The geopolitical tensions have highlighted the risks of relying heavily on a single supplier for critical resources. The war in Ukraine has exposed the risks of relying on a single supplier. The conflict has disrupted supply chains and caused significant damage to infrastructure, exacerbating the energy crisis. This energy crunch is impacting businesses and consumers alike. Factories are facing higher production costs, and consumers are seeing their utility bills skyrocket. European leaders are searching for solutions, but there are no easy answers. They are exploring alternative energy sources, implementing economic reforms, and negotiating with international partners to stabilize the situation. The road ahead is uncertain, and the decisions made in the coming months will shape the future of Europe's economy. The European Central Bank is walking a tightrope. Its mandate is to maintain price stability while supporting economic growth. However, these two goals are often at odds. Inflation remains stubbornly high, fueled by supply chain disruptions and rising energy costs. The ECB has started to raise interest rates, but cautiously. The fear is that aggressive rate hikes could tip the Eurozone into recession. The ECB's dilemma highlights the interconnectedness of the global economy. China's demand for commodities is contributing to inflationary pressures. This leaves the ECB with limited room to maneuver. Adding to Europe's woes is the ongoing fallout from Brexit. The UK's departure from the European Union has created uncertainty and trade barriers. This has added pressure on supply chains and contributed to rising costs. Businesses on both sides of the English Channel are grappling with new regulations and paperwork. Brexit has also had political implications, straining relations between the UK and the EU. The full economic impact of Brexit is still unfolding. However, it's clear that it has exacerbated existing challenges within the Eurozone. China's quest for self-reliance. China's recent stockpiling is part of a broader strategic shift. The country aims to become more self-reliant and less vulnerable to global shocks. This includes securing access to essential resources such as food, energy, and raw materials. China's leaders are acutely aware of the country's dependence on imports. China's 14th five-year plan emphasizes domestic production and technological innovation. The goal is to build a more resilient and sustainable economy. This strategic shift has significant implications for the global balance of power. Stockpiles and market jitters. China's buying spree is sending shockwaves through commodity markets. Prices of copper, iron ore, and soybeans have surged in recent months. This is good news for commodity producers, but raises concerns about inflation worldwide. Some analysts worry that China's actions could lead to a global commodity supercycle. Others argue that the price spikes are temporary and driven by short-term factors. They point to China's history of cyclical buying patterns. Regardless of the long-term outlook, China's stockpiling is creating uncertainty and volatility in global markets. A geopolitical chessboard. China's commodity grab has geopolitical implications as well. By securing access to key resources, China is strengthening its position on the world stage. This could give China leverage in future negotiations and disputes. Some observers see China's actions as a challenge to the existing global order. China's growing influence is particularly evident in Africa and Latin America. These regions are rich in natural resources, which China needs to fuel its economic growth. China has invested heavily in infrastructure projects in these regions, strengthening its ties. China's rise as a global power is reshaping the geopolitical landscape. Over the past few decades, China has transformed from a developing nation into an economic powerhouse, influencing global trade, technology, and politics. This rapid ascent is not just altering the balance of power in Asia, but is having far-reaching effects across the world. The world is moving away from a unipolar system dominated by the United States. For much of the 20th century, the U.S. held unparalleled influence over global affairs, from military might to economic dominance. However, the emergence of other powerful nations, particularly China, is challenging this status quo. A multipolar world is emerging, with China playing an increasingly prominent role. Initiatives like the Belt and Road are extending China's reach into Africa, Europe, and beyond, creating new alliances and economic dependencies. This shift is not just about power, but also about influence and the ability to shape global norms and standards. This shift is creating both opportunities and challenges for other countries. Nations must navigate this new landscape carefully, balancing relationships with both the U.S. and China. For some, this means new economic opportunities, while for others, it could mean increased political pressure and strategic dilemmas. China's growing assertiveness is leading to tensions with the West, particularly over trade, human rights, and Taiwan. The situation in Hong Kong and the South China Sea are flashpoints that could escalate, affecting global stability. These tensions are not just political, but also have significant economic implications. The relationship between China and the United States is complex and characterized by both cooperation and competition. While they are major trading partners, they are also rivals in technology, military power, and global influence. This duality makes their relationship one of the most critical factors in international relations today. How this relationship evolves will have profound implications for the 21st century. The decisions made by these two giants will shape the future of global trade, security, and diplomacy. As the world watches, the stakes could not be higher and the outcomes more uncertain. China's commodity stockpiling is creating winners and losers in the global economy. Commodity exporting countries such as Australia and Brazil are benefiting from higher prices. However, countries that rely on imported commodities are facing higher costs and potential shortages. The situation is particularly challenging for developing countries with limited resources. They risk being priced out of the market for essential goods. This could exacerbate existing inequalities and fuel social unrest. The road ahead is uncertain. As we navigate through these turbulent times, the global economy faces numerous challenges and opportunities. The interconnectedness of our world means that changes in one region can have ripple effects across the globe. China's demand for commodities is likely to remain strong in the coming years. This demand is driven by its vast industrial sector and growing middle class, which continues to consume more goods and services. As China seeks to maintain its economic growth, it will require a steady supply of raw materials. This will continue to put pressure on global supply chains and prices. The logistics of transporting these commodities across the world are complex and often strained, leading to fluctuations in availability and cost. The balance between supply and demand is delicate and can be easily disrupted by geopolitical events, natural disasters, or economic policies. How the world responds to this challenge will have far-reaching consequences. International cooperation and strategic planning will be crucial in addressing these issues. Leaders must work together to create resilient supply chains and fair trade practices that benefit all nations involved. One key factor will be the pace of the global energy transition. As the world shifts towards more sustainable energy sources, the demand for traditional fossil fuels will change. This transition is not just about reducing carbon emissions, but also about creating a more sustainable and equitable energy landscape. If the world shifts rapidly away from fossil fuels, it could reduce demand for certain commodities such as oil and coal. This shift will have significant economic implications for countries and industries that rely heavily on these resources. The transition will require careful management to ensure that workers and communities are supported. However, it will also increase demand for other commodities such as lithium and copper, which are needed for renewable energy technologies. These materials are essential for the production of batteries, electric vehicles, and other green technologies. The mining and processing of these resources must be done sustainably to avoid creating new environmental challenges. The global economy is at a crossroads. China's commodity stockpiling is just one symptom of the broader shifts underway. The old order is crumbling and a new one is taking shape. This new world order is likely to be more complex, competitive, and uncertain. Navigating this new landscape will require adaptability, cooperation, and a willingness to embrace change. The choices we make today will determine the course of the global economy for decades to come.